Good morning, everyone, and welcome to the morning leap for Quantum Leap Futures. This is our pre-market session where we set up our trade plan. My name is Doug McKay. I'm the founder of Quantum Leap Futures. If you want more information about this room, it is a subscription and a live trade room. We come together each morning to take a look at our structure of the market, the different time frames within the trends, drill down to our trade levels and our targets for the day, and then what our main hypotheses are. Send me an email at quantumleapfutures@gmail.com or give me a call, 647-545-8065. My Skype contact is Doug_McKay, and if you want to see more of these videos and check out our history, just go to YouTube and do a search on Quantum Leap Futures. If you like what you see, please follow me on Twitter at Crazy2 or like on Facebook or like on YouTube. Okay, let's get the disclaimer done. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions made. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to financial loss situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan and your own due diligence and your own risk metrics. Okay, so we just had news. So let's get the news out of the way. We had PMI month over month came in at expected minus 0.1, came in at 0, and we had core PPI expected at 0.1, came in at 0.3. Market did not like the news, and we rotated down from about 34.50 at the time down to in the 30s, low 30s. But we're sort of holding in around that 30. 10 o'clock, we've got University of Michigan consumer sentiment and inflation expectations, and then we have federal budget balance. It is rollover, of course. There is more volume now trading in the December contract than there is September contract. There is a 10-point spread right now between the two contracts, fairly large spread, expecting this to be a very volatile day. Okay, so let's start our morning routine. I like to take a look at the macro trends. I use a candlestick chart with a 9 EMA and a 20 SMA. I'm just looking to see where we are in terms of trend. Do we have good slope, good separation? Have we, challenged the trend? You can see on the monthly, we have closed last month for the first time since 2011. And we're currently still below the 9 and the 20 right now. So we're losing the momentum to the upside. We've lost slope and separation. So the trend is being challenged. Doesn't mean that it's done. It just means it's being challenged. On the weekly, same thing. We talked about the fact that we do have a downward trend starting. We do have a reversal pattern, but they came up, almost got to close the technical gap, this gap right here against the 9 EMA, and then they sold off yesterday. So still some downward pressure overall on the weekly, and the trend is down. On the daily, same thing. We've got good slope, good separation. They had the same pattern on the weekly, closed the tech gap, rejected the 9, came back down, consolidated, tried to make a run above the 9 and the 20, failed to get above the 20, and now we're back below the 9 and the 20, and we've got slope and separation to the downside. So the downside the trend is to the downside on the daily. Going into the intraday to check where we are coming into this market, we're basically in consolidation mode. On the 4-hour, we've got separation, but we really don't have slope, but we are trading below the 9 and the 20. So there is weakness still on the 4-hour. On the 1-hour, we've got a possible bearish flag. We do have slope and separation to the downside. We're below the 9 and the 20. To get back above the 9, we'd have to get above 36.50 area. But the trend is down and possibility of continuation to the downside. On the 30-minute, same thing. We got slope and separation to the downside. They failed to get back up and hold above the 9. We've now fallen below off of the news, and the trend is continuing down. On the 5-minute, we have a naked cross right here at 1934, 33.75. Could come back and close that naked cross. We do not have slope and separation. We have a little bit of separation, but no slope, but we are trading below the 9 and the 20. So right now, everything's looking to the downside, and I think the important number to us is going to be our key line in the sand above us is going to be that 1939.75, 1940 level. So let's take a look at the big picture. This is the composite chart. Right now, we've got a 3-day microcomposite VPOC with the microcomposite VPOC at 1940. The CLVN has shifted from 39.75 to 40.50. So 40.50 is going to be our key line in the sand for a move back into re-auction this wick up here and see if we can get some upward momentum. To the downside, we've got 29.50 as our first key area, but I'm really watching this 25 again. Yesterday we were using the 25, and we said if we broke below 25, look for a move back into that 21, 22 area. We failed to break the 25, and then they rallied all the way up to 55. I think the high was 55.50, and then sold off from there and just chopped around into the close and finding balance again in around the 3-day microcomposite VPOC at 40. The bigger picture, we're in this balance area right here. The value area above is 77.25. The value area low is down here at 1904.75. If we break 1904.75, we are back into major price discovery, and I would expect a bigger move down into the 1800s again. So I think it's going to be a very choppy, Friday with everything that's going on. We're still in this area, this whole area, from right to that 1904 area all the way up to 1940 has a lot of undetermined fair value. This is going to just be a chop fest, especially in this area right here between 40 and 25, between these 3 CHVNs, 31.75, 27.75, sorry, 2 CHVNs. We're going to chop around in this area and determine what's fair value here. Below 25, your first major target is the naked close at 21.75 and the VPOC from the 7th of September. And then we're into this chop area down here with the triple distribution zone between 1875.13 and 08.25. Gets a little bit clearer above 1940, a nice target up at 42, solid distribution here, and then clear, defined price rejection here at 48.75. We get above that, I think we get the bigger move back up into the 60 and challenge that range high from yesterday. Let's go to the overnight. Take a look at the overnight. Overnight inventory is short right now. We've got a B-shaped profile here. The VPOC shifted down to 34.25. We're testing the value area low down here at 29. We still have 35 minutes. We could challenge this low and put in a lower low for the Globex. But so far, our Globex low is 27.50. Our Globex high is 49.25. And our VPOC is 34.25. And these numbers can change while we're still in this session. We have an LVN here at 37. The midpoint is 38.50, but really it's the 40 that I'll be watching. I think this is still within chop zone. Our our VPOC yesterday is up here at 40, and it's going to be even a tough area because we've got this this 40-50, but it's right near balance on the 3-day microcomposite. It's right in balance yesterday, so we might have to look at using the 44 or the 48.75 as a clear breakout or a key line in the sand. So let's take a look at how we can trade this. Obviously, if we open right here, we're going to open just outside of value but inside a range. If we get above this 31, we're going to open above or inside a range and inside of value. I'm going to use the 31. I always use the value areas as trade areas because if we get back inside of the value area, we've got a good probability of coming up and testing the overnight VPOC, the price acceptance overnight, and continuation up into the naked close and the VPOC and the midpoint, which is all right here. There is the VWAP here at 38.75. I would be using that as a first target. Well, as a target, there's this 35 and a quarter and the 3-day value area low on the microcomposite at 35.75. So that's right above the overnight and just below the IB low. So I'm going to use the 35.50, which is going to move it up just slightly for the IB. And if we break above that, I can look for an add-on into the 40. Above the 40, we do have that CLVN at 40.75. I think it's dangerous because of the fact that it is in balance. So I really think that if we're going to use a key line in the sand, we've got to use this one right here, which is the value area high from yesterday at 44. A break above that would give us a good probability of taking out the overnight high. There's a 96% probability of taking out the overnight high or the overnight low. Yesterday, okay, or 97% probability. Yesterday, we did not take out the overnight high or the overnight low. We had an overnight low yesterday at 19 and a high of 57.75. We only got as high as 55. It looked like they were going to make a late day push to take that out, and they didn't. So that's a very rare day that we did not take out one or the other. Right now, below the value area low, we've got to be looking to take out that overnight low, possibly even before the RTH open, in 30 minutes, expand this to the low side. 25 is going to be our key line in the sand below us right now for this morning's trading. Below that, we get out of this distribution zone, the double distribution zone, and we've got the naked close, the naked VPOC, the prior microcomposite VPOC, all in around that 21-22 with a naked VPOC at 23. So, below 25, I think we get a quick flush, okay, down to this area, and I would even say a push down to the 1875. The 1875 is a CHVN. It's just above the 2-day microcomposite value area high at 1850. So I'm going to be using that as a target. Obviously, I'm using 23 and 21 as the main target. Secondary target is going to be this 1875. There's a little bit of price rejection here below 17 at 1750. So I'm going to also have that, and then if we break below that 1750, we've got a big target down in the the 12, 13, and 11 area. Most important, where they found value before they gapped up twice is all the way down here at the 12, and you've got the naked VPOC there as well. So that's going to be our main target below us, and I'm going to just front run that by 2 ticks. Actually, you could probably even, I would put it at 1350. You just front run it slightly, and then below the 12, we've got another CLVN at 1150. And then if we don't bounce off of this 12, take out the 1350 CHVN, take out the naked VPOC, and bounce off this 1150, I think we'll get continuation down, and the target below is going to be that 08 1/4, with the really big key number, okay, being down here at the there's the 07, but I think if we get down in this area, we're going to push to this 0475. So I'm going to use the 0475. Because I think if we break out of the balance that we're in right now, the overall balance, and I mean this has been just chop fest. This is a battle going on. We're gapping all over the place, and if they can't hold inside that longer term value, then I think we're going to see that bigger move into the 1800s. And of course, we've got all our targets down there. We've got the 88.75. The first target below is going to be that 98.75 fractal low down there, and then below that you got 94.50, 86.50. That's going to be a target, and then 84.50 trade area, 77.75, the 75, and 67 is, we were talked about that 87. I think 67 is probably the big number below. You could look at the 56, but I think if we get below the 87, you can see how thin the profile is down here. The next big area, okay, of price acceptance, you've got this whole area between the 87 1/4 and 39.75 that is very poorly auctioned, and I think we could flush through that, and they're going to come and look, price discover, advertise price down to the buyers all the way down into this 1818, 1819 area. It's the next big spot for if you look at this area right here, this is the next big longer term microcomposite value area between 3250 and 1791, and you can see that we go back to this area. Just let me tighten this up so you can see this. We chopped around in this area, okay, for quite a while before we finally broke out of value and went into price discovery higher. So if we can't hold, above that 67.56 area, I think we're going to come back down, and they're going to have to come and advertise to the buyers down here at the value area down here, with the microcomposite VPOC being centered around that 1850-19 area. All right, so let's just go back to our, sorry. So those are the numbers below. So let's take a look at above. Of course, if we get above the 40, we got our targets inside a range and inside a value. Above value from yesterday, this area up here is pretty thin. We came down through it fairly easily. The next big area, let me just gotta get this open as well. We've got the 57, okay, which is just above the 55. I'm going to use the 55 with 57 just above. I'll be looking for responsive, possible responsive sellers right there. It's pretty tight there, but 55.50 to 57, and then above 57, there's really nothing to hold us down until we come up into the 60.75. The overall micro composite for this whole area in this value is still above us at 61.50. So the most traded price in all of this chop zone, believe it or not, okay, including the breakout day, because I included the breakout day here, the most traded price is still up here at 61, is it 61.50, 61.75. So that's a big key number there. That's the big target above. Of course, I'd front run it and use the naked VPOC at 60.75. And then if we get up here, okay, I'd be looking for 69.50. Continuation. That's where we tried to hold value up here on these 2 days here. And then the key line in the sand above the big one is going to be here. You've got the CLVN at 75.50, but I would be using the 77.50. All right, and then above that, you've got the 79.50, and then there's really not much up there. You got 85.50. There's a little bit of resistance at 88.25. And then anything, once we get into the 90s, I think we still have that target at 95.25. That's the 50% of this breakout candle. And then the 61.8 retracement, the head and shoulder target, the inverted head and shoulder target, all up here in the 98, 99, and of course a test of the 2000s. And then the 2000s, it's pretty clear that we get into the 2000s. I think we're going to get into the 2015, 2020 area pretty quickly up there. So my main hypothesis is if we hold the 25.25 is to chop, okay, in this area with an upside target. Let's take a look at our ATR targets to the upside. We're currently holding that low as the overnight high. Sorry, it should be overnight low. 27.50. So right now the 20-day ATR target, 20-day average true range is 48.86. So 1927.50 plus the 48.86. That gives us an upside ATR target of 1976.25. And our overnight high is 1949.25. And take off 48.86 20-day ATR target. That gives us a downside ATR target of 1900.25. So we've got quite a range. We had a full session range yesterday of 38.75 and an RTH range of 30. You would think that that would not look like a tight tight trading day, but with the average true range being close to 50 right now, it's been incredibly whippy and expanding ranges. So far overnight, we have a 21.75 point range, and again, these are exceptional ranges for the Globex lately, and I think the Globex has been actually easier to trade than the RTH session. Okay, let's take a look at gold. Gold continues to consolidate in this area right here, in around the 1106. The VPOC, microcomposite VPOC is 10. We're coming down. If we can't hold above this 1104 area, I think we're going to come down and test the 1100 today. And then if we break 1100, all bets are off. And again, I'm looking for a bigger move down into this 1091 50 area, with the first target being 1095. And then it gets really thin down here on gold. So we're at a critical level in gold. If we can't hold the 1100, I think we're going to see a fairly decent flush. There's really not a trade today in here. I mean, if we get above 1112.70, look for them to get up into the 1650, 18 area. The value area high is 1820 with the CHVN. The value area low, you can see, is right at the 1100. That's why I think we're going to challenge that today. If we get any rally going in the indices, I think gold comes down and challenges this 1100, and if it breaks, look for a flush into 95 at least, and it'll be pretty quick, I think. Anyway, that's what I'm looking at. I'm not trading gold today because it's just not in an area that's worth putting risk on the table. I'm going to be pretty tight on my trading. I said that yesterday. I don't hide anything in this room. I ended up having just over an 8-point loss yesterday. I was just on the wrong side of rotations, and I broke a couple of my rules again. I haven't been trading very well in the last couple of days. It's a good example where I didn't trade well on Wednesday, but I ended up with a positive P&L. P&L is a byproduct of trading well, but you can also trade badly and still get a positive P&L. So it's so important to watch your metrics and stick to your risk parameters and your trading rules, okay, to control this. When you get outside the box, you get off the reservation, bad things happen. And I did that in the last couple days. And I've got to regroup. I'm going to be very selective on my trades. I'm going to try to only take the trade setups that I really feel comfortable with, and try to turn this ship around. It's not that I'm having a bad week or a bad month, because I'm having a good month, and I'm still in a positive position for the week. But that's not the point. The point of the matter is you want to trade well, you want to control your risk, and the P&L will take care of itself. When you start doing, yesterday I had to put, I closed it out already. I had to put size on to repair, and that's just, doubling down is just doubling the risk and doubling the possibility and increasing the rate of losses that you can occur. And it was a bad move, and I recognize that. I'm not perfect. Nobody's going to be a perfect trader. Don't expect to be perfect. Don't expect to be, super trader that doesn't take losses. Losses are part of your trading, okay? Recognizing when you get off the reservation and when you're not following your rules and when you're breaking them and you're putting too much risk on the table. That's what you have to recognize. I wrote a 3-page dissertation, last night, okay, going through all the things that I've been doing wrong in the last couple days to get my head screwed back on straight, okay, and not say, hey, I'm hugely up for the month, and not say, hey, okay, I had a bad day. I didn't have a bad day, okay. I had a really bad break of like 6 or 7 of my key trading rules. This is part of my business plan, my trade plan. And when you break your business plan and get off your trade plan, okay, bad things are going to happen to you. And this has been an extremely tough environment to trade this week. Okay, even last week it was still tough. I traded it well, but it's still tough. And these are the times where you got to just step back a bit, okay? Maybe not put the risk on the table. Go to half size, go to smaller size, go less trades, go to just trading your setups that have the highest expectancy, okay? Don't try to push trades. Don't try to be a hero. Anyway, it's going to be tough today. We're going to step back from everything. We're going to trade our high probability setups and take the ones that have a high expectancy and high probability. And if we only put a couple trades on, so be it. This is what we need to do when things go off kilter. Anyway, that's my little rant for this morning. That's going to complete the pre-market session. I told you guys I would never hide anything from you. You're going to see the good, the bad, and the ugly. Yesterday and the prior day, you saw the ugly. Last week, you saw the really good. So we just need to focus and get tough and stick to our rules. Anyway, that's it for today. As always, trade well, trade safe, and we'll catch you on the flip side.